All right, just waiting for some people to enter the room. Time for a live stream, an AriasWave live stream. So we'll just wait for a few people to get in here. We're about to start. So this is obviously going to be on YouTube, so it could be watched later. If you can't watch the whole thing now, you can watch it whenever you have time. But yeah, we're going to dive into quite a few things today relating to current market trends, analysis, and anything else that pops up in the meantime. So if you're entering the chat, just say hello and welcome. So yeah, I'll just pop this out. Yeah, so first things first, what's on everyone's mind? What are people thinking? People who like AriasWave, people who join these kind of live streams, what exactly is on your mind? It's the first thing I want to know about. I have a few things I want to talk about relating to my latest view on the markets, but I want to get your opinion on whatever you're thinking about, things that you want to know, things you want to talk about, things you want me to answer, and what's currently happening. The markets. So bring that on. So I'll start by saying a few things. One of them being, I'm hearing a lot of people say, this is a time to sell. This is a bear market rally that we're seeing. You know, paying attention to mainstream media and, you know, hopping on the bearish bandwagon just because of what you hear in the news, the Fed, and all these different things that are going on. Interest rates, you know, the hikes that they've been doing, do all these things really affect the market at this point in time and prevent it from actually moving up? I'd like to get your thoughts on that. I finally got over a cold I've had for like months. I'm off the antibiotics, off the meds, off the drowsy stuff. So I feel like I'm ready to really start getting back into these live streams. But even though throughout these times, I've still been putting out some updates that can definitely add perspective to the choppiness in the markets, specifically the ones that I've been covering, like SNX, synthetics, Bitcoin. I want to talk about that and what some people think is going on. Some pretty good traders out there who are calling this current move too weak, too shallow, and believe that it's just some kind of channel. You know, people like to use channels to, you know, decide whether or not a market has strength behind it. But there's a few things wrong with that type of thinking. in my opinion. Just because the market starts off slow, it doesn't mean it can't just ramp up suddenly. And that's one of the key things that I want to talk about today, as well as anything else. So if you've come into this live stream and you want to, if you can hear me and everything's clear to you, just say hi, mention that you can hear me, and we'll get this started. And also, if you can, hit that thumbs up as you enter, because it's time once again. So right. Anyway, so I'll start with my analysis. The type of thing I'm seeing at the moment, especially with SNX, and mind you, a lot of altcoins move similarly, whether they start off, with a bit of strength behind them, versus some of them are starting off weak or don't even look like they're producing any results at the moment. Well, if it's a turning point at a low, then it's not gonna just happen instantly. You're not going to just see the market suddenly turn up and spike to the highs, right? So we're looking at a move that is potentially going to gain momentum and start to move upward. So that takes time, and synthetics has bottomed in June, and it's shown some strength. It's shown that it's got potential. It's made higher highs, but it's also coiling up at the highs at the moment to show that we are looking at a potential move up. We are at a critical point now where we're either going to break up or break down. Now, I've mentioned this before in my ideas. How can a market move, potentially break up or down? Unless you know the waves, then you're going to be thinking this type of thing, all right? You're going to be thinking, okay, this could break either up or down. Like if you're into AriasWave at all, then you probably heard of a triangle, and the triangle can resolve either to the up or the upside or the downside, or it can go up and then completely reverse. I mean, these things, they're not really objective. They're just like, we're guessing here. We've got a shape of a triangle, but overall we have no idea what's going on. So in that sort of case, you'd be looking at somebody who likes to short-term trade, right? So it depends on your time horizon, whether you're a trader using leverage or you're the type of person who likes to buy and hold coins. There's a couple of things that you need to take into consideration. So one of those things is, do you like doing your taxes when it comes to capital gains tax, or in the case of holding a coin, or do you like making small bets on small time horizons that then you could just class as regular income when it comes to your taxes? So tax is it's a pain. It's definitely a pain, but it's something that will eventually crop up in in your travels when you're dealing with cryptos, unfortunately. So obviously there is some push to get this sort of thing changed, you know, in terms of law. But at the moment, you know, they just want to keep taxing people because it makes sense to want to, you know, make money off everyone as usual. How many times do they tax your dollar? Well, once you earn it, you know, you've been taxed already. Once you you know, you go buy something, you've got tax on your fuel or your gasoline, wherever you are. They call it different names. Here in Australia, it's called petrol. So how many times they tax it on the goods and services that you pay for? What about money printing? You know, diluting the money supply, right? Every single time that you make a transaction, most likely you're being taxed. So your fiat currency is depleting in value every single day, right? Now, obviously, people talk about cryptos as a store of value, things like that. And, you know, over the long run, that could be true, but everything is still subject to inflation. And inflation is the one thing that is a big subject at the moment. It's a big topic. But inflation, simply put, is the expansion of the money supply. Okay. Now, there's two problems with this. One is that if you don't keep expanding the money supply, then obviously the economy can't continue to grow, because the whole economy is based upon this debt that is, you know, our currencies. Our currency is purely debt driven. So at the moment, there's a bit of a thing, you know, a bit of a problem, because, you know, apparently the Fed has stopped printing, or central banks across the world have stopped printing, in order to, you know, try and curb inflation, and, you know, raising interest rates in order to, you know, try and bring that down. But they're doing so many other things behind the scenes to do this, which in reality, they don't really help. In fact, they don't help at all. They never have helped, and they never will help the general population with money printing. So, you know, stopping the money printing is literally like just stopping the whole economy, right? Just with the excuse of, we need to bring inflation under control. So they put the brake on money printing, and then suddenly, you know, you have a lot of geopolitical events. You have a lot of crises. You have you know, some people like to call them false flags, or they just could be natural occurring things, right? And secondly, the other thing that really comes down to this whole looking at the markets through the wave perspective is that it doesn't matter what the Fed does. It doesn't matter about, you know, these numbers they put out, the fundamentals, as you call them, the macroeconomics, because at the end of the day, what do waves do? They literally are a gauge of human psychology, right? Human psychology is what you're seeing on a chart. Okay, that's why the patterns repeat. They're always the same. Some people don't even know, like some people, you can show them a chart and they don't even know what the chart is, but the patterns are there. They trade based on the patterns, right? Other people, they just listen to the news. Retail investors typically tend to listen to the news. The herd mentality, you know, the madness of the crowds, all that sort of thing. There are times where, you know, you can pay attention to what is being said in the media, especially by the central banks, and they can have, you know, impacts on, you know, like for example, in March 2020, when the Fed stepped in and, you know, introduced the CARES Act and all these sort of things, you know, they can have an impact, but are those impacts going to be long lasting, or are they just going to be temporary measures in order to, sort of try and, you know, put a band-aid fix on the entire, you know, crisis that we're seeing at this point in time. So it just goes to show that regardless of what they tell you in the media or what you read or what fundamentals there are, ultimately the patterns will still produce the same result as long as you're, you know, well dialed into how to read them and understand them. Human psychology will always be there. And it's not just the central banks that control the world, right? Even though a lot of people think that they do, right? It's also the people who go out and they do get these loans. People who do go out and do decide that what used to cost $200,000 is now worth $1 million, and they'll go out and they'll get that loan. Why? Because they believe it's what they should do. You know, these people, they have a herd mentality, and they continue to operate in the same way they've always done. So as traders, as analysts, you know, we can sort of see that. So therefore we have some kind of an edge, but as long as you're actually understanding what you're looking at on a chart, that's possible. If you're not understanding what you're looking at on a chart, what's that going to do for you? You're just looking at basically price in time, ups and downs on a chart, right? Because you think about it, right? A chart is price of, you know, an asset or whatever the chart is, a commodity at one point in time, okay? You look at the price of something right now, the price it is at this 1 second interval, it's this price, right? So every moment there's a change in price. So all it is right now, okay? So obviously if you identify patterns, you can try and figure out that there's a pattern and this sort of happens and it repeats itself. You know, and that's kind of how I designed AriasWave, is to actually find that repeating pattern and not just, you know, use AriasWave where you could have like a double zigzag, a triple zigzag. It could be this, it could be that. You know, you could have this pattern connected to this pattern, a flat, you know, a double flat, a triple zigzag. And it's ridiculous, right? How can all these things help you? You know, like, how are you going to know that that's what's going on? It just doesn't make any sense. And that's why I created AriasWave in the beginning. So at the moment, you know, I called the top of Bitcoin, and I called it a year ago or before that, thinking that it was a different kind of pattern, right? Now I'm calling, when I called the last top, it was, you know, thinking that it was a C wave down. And it was going to keep going down, down, down to what some people think it's going to go down to now, like 3,500. But I don't think it's going to happen now, but I do think it's going to happen after an all-time high. Okay, so once we get to that all-time high, you know, like we're heading there already in the stock market, right? The Dow Jones, the NASDAQ, they're already heading into that high. You know, have a look at the chart of the NASDAQ, it's going up. S&P 500, it's going up, right? Even though they're hiking. So what does that really say to you? Does that really say to you that, you know, the market's cooked and that's it, we're done? Just because they're raising rates, you know, it doesn't really mean that, right? But as a society, as a you know, as the crowd believes that that's what's going on, you know, that seems to be what everybody thinks, you know. So is it true, you know, and why is it true? So unless you have a way of gauging what's going on in the markets or understanding the patterns that you're seeing in the markets, then how on earth do you expect to actually predict anything in the market? All right, you're going to be going based on a theory, doing what everyone else is doing, but you're not really going to have any real understanding. So therefore, why would you hodl? Why would you hodl anything, right? Short-term moves using AriasWave at the moment have been more effective at creating some profits than long-term swing trades. It just has, right? I do a bit of both. I do a bit of short-term and a bit of mid-term, but long-term, it doesn't make sense right now, right? Now, a mid-term trade for me is from now to all-time highs. A short-term trade would be a day or two, right? Or, until I see a pattern complete, right? So according to AriasWave, there's only two patterns that occur in the markets. It's a zigzag and a 5-wave move. If you don't remember that, I mentioned that in a lot of my videos. If you don't understand that by now, then you need to learn about the waves, okay? So what does a zigzag consist of? Is it just 3 waves? Technically, yes, but within the B wave, ABC, in the B wave, there is a certain set of patterns that occur, right? If you don't know what they are, well, that's the key, right? A correction is the key. Every single correction, like a correction is the most hardest part of any move in the market that you could try and figure out, right? We all like the big 5 sharp 5-wave moves that move really fast. But what happens when those ones end? You get a correction, right? So I focus mainly on corrections because they are the most important. So yeah, sure, you can take profits after a 5-wave move, wait for a correction. What kind of pattern is that part of? That's your job. You need to figure that out, right? So in essence, every single pattern that you ever see on a chart is probably part of a correction, whether it's a long-term correction, mid-term correction, or short-term correction. A lot of people just focus too much on moves up, right? Like, for example, what happened after March 2020? We had a move up, right? And you even got to the highs, and probably you had most people long at the highs. And that's the problem right there, right? People think, just like economists do, they tend to extrapolate into the future, thinking that what happened in the past will happen in the future, right? And it's the biggest fallacy in trading, and that's why a lot of people get chewed up and spit out in these moves. Now, there are some people who do catch those tops and bottoms and whatever, not exactly, but pretty close enough to at least avoid losing a large, amount of capital. But it's the ones that don't catch it, which is most people, those are the people who lose out the most. So what I try to do in my analysis is just basically try to indicate whether or not a pattern is complete, right? And if it's not complete, well, where is your critical support, and where do you move your critical support up? If you move it up, then that means we are reducing the risk, and then we can either expect further upside, or, well, if we're wrong, well, we've reduced our risk, because there's no point keeping a trade on if you have suddenly started to not understand the pattern. Okay, so not understanding the pattern is already a problem, okay? Because just say, for example, the market's moving up, but I don't know why it's moving up, right? It goes back to that old saying, is that luck is the worst thing that can happen to you in the markets, right? Because if you have a bit of luck, you make some money, the next time you feel that you're getting lucky, you can get wiped out. Not only because poor risk management, but also because you got cocky and you didn't really know what you were doing in the first place, right? Like most people, like a lot of people, whenever you start to hear people saying that, like you hear your grandma start talking about Bitcoin, that's a bit strange, because does your grandma do technical analysis? I mean, some might, but I'm pretty sure a lot of them don't. So they're just moving with the herd, right? And if that's the case, then there's a bit of trouble behind that. So that's kind of the thinking behind, looking at the waves and using them as a guide. So at the moment, how long have we been going for here? So far, no comments on this. So if anybody wants to chime in with a question about anything, now's a good time. We got some viewers in here, but no interaction. Is everybody glued to the chart at the moment? Is there any moves that people are wondering about what is going on? Okay, so far, no questions. No one really has anything to say, just watching, paying attention. Yep, it's pretty early in the US. Welcome, Luca. Luca, good to see you again. Welcome back. Yes, indeed. One of my members, probably a couple of my members listening, probably busy. So at the moment, I suppose, you know, with my latest Bitcoin analysis, right? Now I'll only start displaying stuff when people start, you know, actually chiming in with something to say. Bitcoin at the moment is pushing lower, but according to the count has already confirmed a move up. Right, so any correction that happens at the moment, it's you know, it's very interesting because, you know, if it goes much lower, then count will be invalidated. So at the moment, we're going down to 0.618, almost there, in a very sharp correction. So CPI numbers definitely caused a spike, but, you know, unemployment, you know, these types of numbers, they do cause short-term moves, but they only add to the waves and what they could potentially be. So the one thing about corrections, especially when you're potentially getting ready for wave 3 price action, is that the corrections are sharp and they can be scary, right? Which is why it's always good to wait for the pullback at the beginning and take a minimal risk trade, right? In SNX, that's the case at the moment. We're getting a sharp pullback, and, you know, but it's also bouncing a lot. So, you know, it hasn't actually broken any rules yet in terms of the analysis. So when it comes to the waves, a lot of sharp moves down can definitely knock people out of trades, right? And the reason for that is because, welcome Joshua, getting to work yet. I know, look, I'm going to produce more live streams at different times because I understand the geographic locations of a lot of you guys. So on the weekend, I'll probably do some more of these just to get more, you know, conversation going. So look, at the moment, corrections are looking funky as, but you know, as long as I don't break critical support, these moves could actually suddenly shift, turn around, and spike really hard. And if we're talking about third of a third wave, right, why would these moves be easy to get into, right? You got to think about that for a sec. Why would a third of a third move be an easy move to get into, right? That is literally the hardest thing to do in trading, all right? But every now and then you get to a point where you are right at that point where that's going to happen. Now, you either proved wrong, or if you're right, the payoff is worth it, completely worth it. So, you know, as ongoing long-term, you know, traders and, you know, people who love the markets, I'm pretty sure that you've been through some ups and downs when it comes to this sort of stuff. But usually it's the sharpest moves down that don't break critical support are the ones that get the highest push up. I remember back when I was trading the Brexit, the Brexit move, and also the 2016 elections. I learned a lot of lessons from those types of moves, where you get a sharp move in, you know, like for example, in the pound, you know, you're getting a move up and then suddenly you start to get a massive drop, huge drop, right? You can call it a black swan, but it's just a wave 3, right? And those are the types of moves that you want to get into, right? And those have been the drivers for me the whole time as to why I make these, you know, why I created AriasWave, why I create these videos, because I want to capture that. I want to capture those moments where you do get those moves, not just in the small degree, because they do happen in the small degree, but they can also happen in the larger degree as well. Welcome, Matthew. Good to see you. Long time. Good to see you back. And yeah, I'm back also after being sick for months on all sorts of meds. It wasn't the, you know, the thing going around, but yeah, some crazy flu stuff going around, and I was on all sorts of meds, feeling like I was on all sorts of drugs. But yeah, it's a members party, definitely. It's pretty cool. But yeah, getting back on track now, I think that it's time to really start producing more of these live streams, and really getting it cracking. So right now I'm looking at the SNX chart, and I might as well just start sharing a bit of that, just because. Now I know you guys love XLM, totally get it, and I will get there in a live stream. I'll touch on it even on this live stream, but the only reason why I haven't posted much about XLM is because of the way that the correction is unfolding. It does have the potential to create a pretty good setup for a move up, but that's still kind of happening. It's still unfolding. We want the C, D, and E to be, you know, getting closer to being there, right? I don't really want to be producing ideas when there's not enough evidence for the waves. All right, so if I'm to share a screen right now, All right, I'll be sharing this one. Right, so we're looking at the SNX chart currently going on right now. That's what I'm looking at. And we are literally, we have pulled back a lot since that last update that I posted. Right, and you can see what's going on here, right? We broke what I believe was the start of wave E, and then we came right back down. Something that I thought would happen, which is why I said 6.618. It's been a common occurrence in this market. And now that we're seeing it happen the way that it's happening, it's do or die right now. It's literally do or die with a small stop. But the gain is potentially a third of a third wave to the upside. And once it does, if it does start moving up, there's no stopping this thing. Okay, and this is happening right now. This is what we're looking at. I'll just turn off these moving averages. Don't like too much stuff on the screen. VRA, I'll check it out, definitely. I'll have a quick look at it. But look, where does this all end? You know, these these labels don't mean nothing at this point, you know, like literally don't mean anything. Like this could be E here, you know, this could be A. It could have been one of those big A waves again, right? This could be B. You know, we could have had a CDE pattern happening right here. You know, like I do the same thing you guys do. I try to label waves and make sense of them. But these A waves on this chart on SNX lately, those A waves have been insanely crazy, like really sharp type 2, you know, zigzags. Just insane. Like this could be an A, B, C, D, E, like, but it just can't go much lower, you know, like, and that's the type of thing, like, to what extent do you drill down to look for that entry point? You know, like you can go to the smallest degree and then that one will give you the entry, you know, and how far are you willing to take it? Like it literally, after all this time, it might just come down to this. Does it break up above the beginning of this little mini E wave, if that's what it is, right? You know, like using, you got rid of premium because it's garbage. You know, using RSI, what is the point of RSI? You know what I mean? Like RSI is garbage. It doesn't help you. Like I've always said, indicators, they're no good. Okay, they're literally no good. So I just like to look at them just to see how bad they are. You know, it's like, what the hell is that? What's that even for? Like, well, of course, it's for the people who don't know anything and they go, oh yeah, I can use this, and then they start experimenting, but they're throwing money on at the same time. So, you know, it makes them feel like they're learning, which is true, but it's a pretty long road to learning. Yeah, so SNX definitely still correcting, but to what extent? Like, for example, you look at this pattern here. What is this pattern? Is that a CDE? I mean, the only thing that makes me think it's a CDE pattern is because of the, you know, the correction within. It looks like just a zigzag, right? So, and plus, regardless of what, if this is C and this is E, regardless of anything, I don't see a wave 5. You know what I mean? So, like I said, there's only 2 patterns in markets. It's a zigzag or a 5-wave move. So, can you count this as a 5-wave move? I don't think so. All right. So, something like this with that kind of correction within, it's got to be a D, right? So that gives me confidence that it's a CDE, given, you know, the previous analysis, A, B, CDE. Same thing as what's going on here in a smaller degree, A, B, CDE, right? The E wave's longer than the C wave. Same thing here, right? C wave, E wave, C wave, E wave. Look at that. And right in the middle there is a little zigzag that is just a zigzag. There's nothing else going on in there, right? So it's things like that that I use as a, you know, it's almost like a coping mechanism, right? How do you keep your sanity in a market that does all this sort of stuff, right? You got to try and, you know, rationalize your decisions. Otherwise, what are you really basing it on? You know, is it just that fear and greed? You know, is it just that thinking that you might know the Arias wave? And I mean, eventually it becomes second nature, and then it doesn't matter. But you know, in the process of learning it, like at which point do you make the call? You know, like obviously when it breaks the critical support, well, you've made a call there. It's not hard to make a call then. But then you play devil's advocate a few times and you think, okay, if this is a correction to keep moving down, well, it doesn't look like it is. Could it be? You know, things like that. So, you know, aside from that, you know, you look at the S&P, right? Since June, the S&P, right, it broke that previous high. So if that was to be a 33535, well, that one's already broken the E wave, the start of the E wave, right? So to me, that there is already bullish for the S&P, right? The move up there, I mean, you try to rationalize what that is. I mean, choppy as hell type move, but you know, if you're looking at this as if you're looking at this as an A, B, C, D, E pattern, that's it. You know, you got one more all-time high, but then how far does that go? I've already measured that at some point, and it's, you know, it's not going to end at the highs. I think it'll go a bit higher than that. But that's the kind of thing that we need, right? We don't need just an all-time high to just be hitting the all-time high. We need a move that's actually going to push hard high. And on the Arias side, it'll probably be really weak, right? Because fifth waves are usually the weakest move, even though they create the final high. So that's obviously, I believe that's what's going on now. Because really, like, if you think about the fundamentals and the rate hikes and all that sort of stuff, what's really causing this to go up when everything is looking so bad? Everything's, you know, it's the opposite of what people are thinking, right? It doesn't make any sense. So that's why I believe a lot of these YouTubers, they're getting it wrong, right? They're getting it wrong because they're thinking too much about what the Fed is doing. They're thinking too much about, you know, China, the war, you know, the slowing down of money printing. You know, people think that literally they have these levers that they pull and they make the market move up and down, up and down. But people, you know, you got to understand that it's the whole population that's causing these moves. You know, it's the crowd psychology. Well, yeah, I mean, to address Matthew Fraser's comment right there, as you know, I have been covering the 10-year bond yield extensively for a long time now, and I did call this move up in interest rates, you know, a long time ago, right? It's been like a year and a half, whatever, I've been calling this to go up, 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 and I believe it's going to go up, up, up to 10%, 15%, right? It's part of a long-term correction, which started, like I've said before, like 1,000 years ago minimum, right? And we're getting towards the end of what is the B wave of a zigzag, right? So this is the E wave moving up, right? Now, this E wave in terms of long term, right? And I mean, we've got to look at the long term here, right? This being, sorry, where's my D wave gone? Oh, there it is. Yeah, I don't use log scale on this particular chart. But, you know, like looking at a zigzag, right? You're going to get a B wave. Why is that? Because you're going to see another move down into negative territory for interest rates, right? And I've said this many, many times, right? Once we hit that high, we are going to go down hard again into negative, like definitely way lower, or has to make a new low in the bond yield, which means interest rates will go, you know, especially in real terms, deeply negative, right? So in order to get that E wave spike, right, which E waves can be devastating, especially in interest rates, does that look like an E wave is completed at the moment if it's a long-term pattern? No, it's nowhere near completed, right? I reckon it's literally getting ready to smash higher. But any kind of corrective pattern that we see right now is going to give the market an opportunity to make an all-time high. And by the time this thing actually does start smashing higher, that's when we're going to get that recession that, you know, a lot of people are saying that we're in already. I don't think we're in it already. I think that it's still coming. We've broken the previous wave 4 high. That's already an indication that, you know, this is confirmed. You know, these type of V wave recoveries that break previous highs. I mean, when was the last time you've broken a previous high? Since 1981, right? It just doesn't happen. But we've done it now. So it's a confirmation that we are going to see that E wave to the upside to complete the B wave, right? And it's probably going to go pretty high, right? Whether or not it actually grinds down, I don't think so, because C waves, it won't be as weak as a D wave, because you got to remember, since 1981, right, until, you know, the low of 2020, that hasn't been an impulsive move. It's been a zigzag, right? It's been a type 2 expanded zigzag, right? But once you get a C wave down, that thing's it's gonna crater, you know, and that's gonna definitely cause a massive bull market in everything, right? So, well, that's right. And they are, you know, like I said before, regardless of, you know, the Fed doing what they're doing or manipulating numbers, I keep saying this lately a lot. It doesn't matter if they manipulate CPI or inflation figures, right? Because that's all human psychology, right? Whether it's the leaders or not, they're human, right? So, you know, it doesn't matter what kind of human you're talking about, whether they're just a participant in the market, listening to the person who is manipulating. We're all participants. So even the people who are manipulating, they're also participants, because they're all human, and we're only human, and human psychology, that's what the waves tell you, regardless of manipulation. That's the one thing that I've noticed about the waves, which is why they're so consistent, is that it doesn't matter who's doing what, dodgy shit behind the background in the background, right? It makes no difference because it's all human, right? We are from nature in every aspect, good or bad, manipulator, honesty, whatever. It doesn't matter. It makes no difference. So the patterns over hundreds and hundreds and hundreds of years have always maintained, you know, their levels. And in terms of AriasWave, the patterns have always been there, and they always will be there because it's a collective, right? We are a collective, combination of humans that really we are all indirectly influencing every single wave that has ever occurred in history, right? Regardless of how you look at it. So yeah, sure, you can listen to Bloomberg and Michael Saylor and, you know, Richard Hart and whatever. It makes no difference, right? Because everything's correlated against the US dollar. Okay, some perform better, some perform worse, but ultimately, you know, some will crash, some will get wiped out completely. As long as you're shorting it when it crashes, that's good. You know, there's always money to be made. These days, people will buy absolute rubbish. So just say, for example, you shorted Terra Luna when it went to zero, basically, right? If you shorted Terra Luna, yeah, you still would have been able to make that money because somebody at the bottom would have bought it. So liquidity is there regardless, because there's always a buyer for a seller, right? That's how it works. It's a zero-sum game. That's how the markets work. So regardless of anything, yeah, I mean, Gregory Mannarino definitely understand exactly where he's coming from, but he also does maintain that the bond market is the indicator, right? So if you see these yields spike like crazy, recession, right? At the moment, we're at a very specific level where you have to understand that nominal terms versus real terms, there's a difference, right? Even though we're at what, 2.8 on the 10-year bond yield, we're probably still negative in real terms. In nominal terms, you know, it's going up, but there's so much other, you know, things going on in the background that really trick people into thinking that, you know, interest rates are going up. They're going up for the people that they want it to go up for. They're not going up for you know, the big players. The big players are probably getting the best rates. The regular person, the middle class, they're copying whatever you're getting thrown in your face. You gotta take it for what it is. So yeah, he's right. The bond market, which is interest rates inverse correlated, you know, the bond yields, they are going to dictate what happens to the middle class, you know. But it's a pretty complex system. Ray Dalio explains it pretty well in a lot of his material that he's released. If you want to understand more about how it actually works, I'd suggest you listen to that. But everything is a cycle. We're in the midst of a, you know, we're almost at the top end of a cycle before we come into a downturn. Right. So everything will get flushed out and it'll reset. So all this great reset agenda talk, it's just basically a natural cycle repeating itself. So it's not like it's never happened before in history. It's just that now we like to name everything, but we live in this information age now where if they don't like what you say, they'll just cancel you and censor you and all that sort of stuff. So it's a very strange time, but I think that there's plenty of opportunity there if you just know what you're doing and just ignore, you know, the mainstream, basically. Yeah, absolutely. I mean, they do it in indirect ways, right? Especially if you listen to the Ray Dalio content, right? Like there's all sorts of trickery and sorcery and wizardry stuff that the Fed does in order to manipulate the markets. It's not just a case of, we print money and give it to all the rich people. The way that they do it, there's so many different ways that they can basically pull the levers. Oh, we want it to go here, we want it to go there, because it's all political, right? So even though the waves, they do dictate, the truth, the politics is it's insane. The bureaucracy and the hypocrisy, it's absolutely, it's ridiculous, right? And it's done right in front of our faces, right out in the open, but it's all done in a way that it's perfectly acceptable and legal according to, their own framework and their own rules, because the central banks, they're private entities, right? So what rules do they really have apart from public perception, right? So it's just all about public perception. They can do whatever the hell they want, right? But it depends on the psychology. Like they have to maintain peace within the populace. Otherwise, all sorts of shit can happen. Civil wars, all that sort of thing. I mean, it's crazy. I mean, it's all the same. Bitcoin, like anything, especially in a day and age where you get literally a money printing bonanza. I mean, you got Bitcoin, it was the first one, but it's not like it's the only one. And the reason for that is because of low interest rate environment, money printing, like it is a tulip bubble, right? But what is a tulip bubble, right? It's just a really sophisticated, technologically driven tulip bubble mania, but the whole system is, right? So I don't really like that analogy, to be honest, because we live in a time where it's obviously not a tulip. I mean, a tulip is just, it's a bloody plant. I mean, it's just a flower or whatever. But it's the same kind of principle behind it. It's the same kind of psychology, right? It's just that you have something tangible that, is in the information age where there's communities and networks of people who are driving these technologies and these things forward, but they're using them in ways that can really change, the future of, how we conduct, transactions and business and all sorts of stuff. So it's a legitimate tulip bubble. It's not just something that's going to phase out. And the proof of that is altcoins, right? Altcoins are the proof that it's sustainable, but in saying that, a lot of them will get wiped out, right? They will get decimated. We've already started to see that happen. And once once a lot of those die off, sure, then we can start to think about use case. But by the time that happens, there will be a real focus towards, looking for those new ideas that will really drive, the progress of humanity forward using every available tool that we have. There will be people looking for these solutions. At the moment, it's like, obviously, like the .com bubble, and a lot of people like to talk about, the example of Amazon, right? Back in the 90s, Amazon was, you know, part of the .com era, but it's still around, you know, like, but a lot of companies back then did die off. And the time when I see that coming again to produce a similar effect, it won't be until we get another all-time high. So once we get that wave 5, and then we get that big crash like a .com bust, except this time it's going to be far-reaching, and it's going to affect a lot more, because you got to think about it. You know, the system needs a bit of a tidy up, a clean up, or a bit of a reset. Yeah, China. Yeah, when it comes to China, to be honest with you, yeah, I think a lot of this political stuff, mainstream media stuff, I think a lot of that is all just, I don't know. You got to think about it in human terms, you know, human psychology terms. I mean, the whole world is already integrated and linked together. They work together. Apple makes American products in China. I mean, you know, COVID started in China. You know, Microsoft had, you know, a lot of technologies that helped everyone through COVID, before COVID. You know, these people are a lot smarter than you think. I don't think looking at that sort of thing really matters. I think it's just a general overview of where we are going as humans collectively. We are going to have booms and busts because we all have these emotions that drive us through fear and greed. So I know that use cases for each country are about as reliable as use cases for cryptos, right? Everybody has a role to play. Every crypto has a role to play. But in the end, at the end of the day, human psychology is going to be the one that dictates, you know, the boom and bust cycle, right? Which is why I like Ray Dalio a lot. I think he's probably got a lot of the best material out there for learning about that sort of thing. But once again, I'm all about the waves, and my only thing right now, one more all-time high, and then we're going to get that recession that everybody's fearing, right? But mind you, though, before that actually happens, we're going to start moving up in a way that will probably convince people that it's just going to keep going higher, okay? Because people like to extrapolate whatever happened in the past, the future's brighter, and Bitcoin's going to $10 million, you know, per coin, right? It's that sort of stuff that I'm a contrarian, and I think that we are in the midst of seeing that. How we get there, that's the hard part. Obviously, once we're halfway there, it's going to be easy because we're halfway there. If you got in at the bottom, you're sweet, right? Just get out at the right time. But we're not even gaining that momentum yet. So we are in that stage now where that momentum is sort of starting to gain traction, right? You know, so going back to the good old SNX, has it kept breaking down? No. Let's go to XLM. What's XLM doing? I bet you that I can look at this chart and see it straight away. Well, there you go, half a D wave, right? That's what I'm saying, straight off the bat. CDE pattern in progress, right? You got your C wave here, half a D, and then you're going to get an E, and then you're going to get a break, and then you're going to keep going higher. You know, it's, you know, once you know the waves, you can almost just see it happening. I mean, come on, you guys should know this already, okay? What's going to happen here? If you're a short-term trader, right? And this is what they teach short-term traders in prop firms, right? I know because I started to train in one, and then I lost all interest because of how basic they do things. But you know what? Sometimes basic is good, right? Especially if you want to trade those, you know. So prop traders, professional traders, the most common pattern they see is zigzags, right? So they're all about the fibs, right? So for example, if you're a prop trader, if you're one of those little pro traders, whatever, prop firm traders, and if you want to trade this right now, all you do is take a fib 50%, now's a buy, and you'd basically take the length of the first move, whatever that is, from at least 50%, put a trade on, you take that profit right there, and that's it, that's your trade. You're done, okay? You wait for the next opportunity. But then you look at it from the opposite angle, then this could be also in the opposite direction, the same thing, right? So this could be A, you get a pullback on the opposite end, right? Like this, to 50%, 0.618, and you take an opposite trade in the downside that's the same length, back down. There's your trade, done. There's two trades right there I've given you. Take them, right? Try it out. Don't risk too much. But those are two trades. That's how professional traders trade, right? You could have done that. You could have done that here, right? You could have done that here, right there, right? So if you know AriasWave, obviously you know when there's going to be a zigzag and then another zigzag. All you got to do, right, is go the 50%, right? Trade it up, same length, whatever, from here to there. Look at that. Take your profit, wait for another move, pull back. But at least if you have the AriasWave perspective, you can kind of gauge what you're looking at and how to trade that based on what you're seeing, and does it make sense, and what's the potential next move. So in this case, once you get that move down and you've taken that position, right, then obviously a break of that move there, if it's E, then you can hold that for a bit longer, right? So you got to have different strategies for trading: short term, mid term, long term, right? Because it's all fractalized. So just some tips there, if you like those. But look, this has already gone over an hour, kind of, sort of. So unless there's more questions on this one, XLM could be on the bottom there due to the weird pattern. I did say in the last crypto market update that, we have an inverse head and shoulders pattern right here. I'll just make this line a bit more visible for you. Right, we'll make it Y and 4. Right, head and shoulders pattern here, here, here. Right. Now, as long as you don't go beneath, sort of this level, even if it does come down here, that's still fine. You're still going to go up. Inverse head and shoulders. Like these patterns, they do make sense, but only at certain times. And you should only use them as secondary guide. I'd rather use those patterns than an indicator, right? Because you could make sense of it. You could, in your mind, you can say, okay, that's an E wave, and then you got this move up. You're looking at it in a wave perspective, but then you look at the pattern perspective and what other people are looking at, right? And that's another thing they tell pro traders when they train them, is that you got to look at what other people are seeing in the market, right? So you do use these as secondary tools, not primary. Right? The primary is always the waves, and then you've got those other, things going on. Pullbacks, 50%. 50% is a big one. 0.618, not always as much, but 50%, they always use that. And they go for the small gains, the low hanging fruit. They typically go for, I'm trying to say, right? So, I know I'm drawing a lot of stuff on that chart. So let's just switch back to ZX. But look, I hope you guys enjoy my updates lately. I'm going to try and, do some more live streams because we get more people interested. But it definitely has been a members party here today with Matthew, Joshua, and Luca all joining, which is pretty cool. But yeah, so please like the video, subscribe if you're not, and I will try and get a few more on this weekend. I will try and do different times. If you want to comment at what time, just what time suits you best, where you can relax, just leave a comment, including your, is it Eastern time? Where are you? Like, don't just say 9:30. It could be 9:30 in Japan. Apart from that, yeah, this has been great. Good to talk to everybody. Good to be back in better shape. And I hope to talk to you soon again. So thanks for the input and comments. And I'll leave it there and I'll catch you on the next one. All right, guys. So take it easy and have a good day if you're in America, or night if you're not. Awesome. Take care and I'll catch you.